Hey everyone, Russell here, and today I want to share 10 investment strategies, like from least risk to least risk, least profit returns, and from to the really risk investment strategy with really high returns. So every investment have a risk, but if you just beginning, just starting building your foundations, if you just graduate from college or high school, your first job, you probably don't want to get into the very risk investments like options, future tradings, or start a business like you don't have experience with. So I want to share like 10 things. You probably heard some, but you probably don't heard all of them. So that's 10 things I gathered together for based on my knowledge. This basis the whole world most people make money off. So the fourth step actually not related to investment is when you should start to invest. The fourth thing you should do is if you have debt, you should be pay off your debt first. But it's not mean all the debt. One exception is your mortgage. So if you have car loans, student debt, credit cards, or personal debt, all these will be really bad to drag you for investment. I know there are a lot of people say leverage, but that's different. It's personal debt, credit card, student loan, that's not leverage. That's just debt. So if you have debt, they can really slow you build-wise and slow your investment process. Why? Because first of all, debt, you have opportunity cost. If you buy a car for $50,000, you have 5% interest, and every month you print principal and you print interest. But if you put the money instead buy the car, buy a used car for $5,000 instead of $50,000 to put in the market for 10 years, 30 years, your investment will grow 1,000 times more than you pay the car. Instead you pay other people. So that's opportunity cost. The second is it's really slow your build-wise investment process. That's what they do. Also another thing is compound interest. So if you invest money every year 10%, you compound interest. That's how a lot of people build wise. But if you have debt, you not only didn't compound interest, also your compound interest is against you, but you compound interest for other people. The third reason debt is really not good for you to build wise and start investment is when you own someone, you're mentally, emotionally actually is impact. Like the Bible have really good sentence talking about this. Like Proverbs 22:7 is mentioned, the rich rule over the poor, and the borrower is a slave servant to the lender. So basically, if you borrow some money, you're mentally is on something you almost like servant to the people, because they can rule your life, make your life miserable. If you have debt, they can call you, and the credit card call you, and worried, and you cannot sleep, and then all this stuff together. So it's just your intent, your time and the effort was get distracted, not instant focus on investment. So if you can pay off all your debt, include student, car loans, personals, and credit cards. If you don't have all that, okay, you have a good start. So next step is to save for saving money. The second step is the first to pay off debt, except the mortgage. Because mortgage is your house value go up. Other than the mortgage or something you have debt, the value didn't go up, you should all pay off them. The second step is saving money. Okay, so this is the only way everybody knows to saving money. So how do you save money? Two ways: to increase your income and reduce your expense. They can happen just one way, or it can happen both ways. If you raise your income and reduce expense, you can save it much faster. So what are you saving for? You're saving for emergency. So you have emergency fund. You probably heard this. So you're saving for emergency, and you save it for your family in the future. So if you have 3 to 6 months emergency fund saved, and you pay off that, the next step is invest. So what you invest, first step for investment, if you work for the company and they have 401k match, no matter 3%, 6%, 10%, 15%, you should at least invest to the match. Okay, that's free money. You put in 3% or 6% of your salary, invest to your company 401k, and then the company will give you 3-6%. So that is the first step. And also make sure you choose, there's a traditional 401k which before you pay tax, so it's tax deduction. But also there's a Roth 401k you pay after tax, and the fund grow tax free. So if you have Roth and you want to choose the Roth one, because all the money you put in you pay tax first, but all the growing for the next 10, 20, 30 years, 40 years is tax free. So that's very beneficial. So the second, so you have 401k match, don't reach to the total amount yet. Then the second one is do Roth IRAs. So Roth IRAs is a limit for each person, 7,500 2026, I believe, 7,000 in 2025. So Roth IRAs, when you invest your after-tax money and you grow tax-free. So you want to do that second. The third also you can do if you had a side hustle, side jobs. So then as a self-employer, you can open a solo 401k. So what they do, you can invest that plus your company 401k, about 20% your net income from a side hustle to invest. That one, solo 401k, you also can choose Roth or traditional. So you want, if you have option for Roth, you always want to choose Roth. Okay, that's the third, the fourth one, IRAs, and the fourth one is pay off. Fourth one is save for your children's 529s, and also you can do 529 state from your state, and you can do SHA, which if you have high deduction insurance, you can put 4,000, maybe more than 4,200 or some to your SHA. I did it for 2 years, and they grow like 60%. So you can put there, and they grow tax free. Can use for medical expense, and you can also use FHAs, which is if you have children, young children, spend on independent children for daycare expense, and they can deduction for your tax. So that's the next step to save for your children and the SHA and the FSA stuff. Then you can choose to pay off your house gradually if you want to, or if your like interest is under 3%, you don't need to pay off your house gradually, because if you can use money to make double that. If your house mortgage rate is 3%, but if you can make 6%, which if you SPY at P500 more than that, I don't think you should pay off your house, but that's your choice, because pay off your house, you don't owe anybody anything, that's good too. But if your mortgage is more than 5, 6, 7%, you should pay off your house as soon as possible in the after invest 401k, the IRAs, and save your children 529 and SAAs. So that's the next step. So after you have your house all settled, no debt, have savings, have 401k match, have Roth IRA, all funding. For 529, you can reach the goal. SHA, your funding, FSA, you all have that. The next step is you can try to open your own broker account to invest individual stocks or index funds or mutual funds if you don't know how to do it. So you can open the broker account. So after you open your broker account, and also before opening your broker account, if you want to maximize your 401ks, you can max all the 401k contributions. So after that, you can open your own broker account. So own broker account is your free money. It's the money, if you lose it, your family in the next 6 months should be fine. So you can invest this extra to individual stocks index funds or mutual funds. So that's the second step you can do. So I'll open that. After that, you also, if you have more extra margins, like your probably your net worth maybe around 300, 400K or 200K, and your family all take care of, and you have free money and you want to take more risk. So next, what you can do is you can do options. What option is a contract. Instead, for example, Tesla, instead buy 100%, 100 share of Tesla stocks, it will cost you maybe $450,000 for $55,000, but you can just buy one contract with 100 share of Tesla stock for long-term options call contract. You can buy 2 years, so it maybe cost you $8,000 instead of $55,000, or Amazon or Google or Nvidia. So any stock you feel is more safe and they are not go bankruptcy for next 2 or 3 years. Amazon now go bankruptcy next 2 or 3 years because their business model, everything. So if you buy a long call, you have the benefit. You have least capital, give you a 2-year. Normally, all the stock in 2 years they will go up if you based on the history data. So that will give you use the least capital, buy more shares, and you can sell in 1 or 2 years, depending how long you buy. But don't buy short contracts. Buy long term, lease more than, I would see, starting 9 months, 1 year, 2 years. I always buy like 1 year, 2 year, lease at six months if I know the market is really good. So you can buy long-term options. The option you can play many ways. You can buy long calls. You can sold put, and there's another safe way to do, which you sell put, and that will give you time. If the stock go up, you just declare premium, and the stock go down. If you get a cent, you buy the stock for the cheaper price. So, and also you can buy puts. You can sell cover calls. If you win 100 share of Apple, you can sell cover call for higher price, collect premium, but also you can get more money. So option really is another financial product, really give you more leverage, flexibility, and can make more is more risk, and but also give you more profit for a short time. But it's doable if you know what you're doing and you know the risk. But don't get greedy and try to just make money, but you know what you're doing. That's the next step. You can really get a fortune. There are some people make $1 million just for trade options, but you should start more if you try to get into it. So that's next step. That's the 8 steps options. Then the next step is you can do your own business. So if you have margin and your net worth is enough to support your family for next 5-10 years, and you want to do your own business, you can start and do it. Give a try. And because business really, there's no limit how much you can make for your business, because if you work for a company, there's a limit how much you can make, because that's limit your salary. No matter 50K, 60K, 100K, 200K, that's every year you got. But if you start your own business, no matter what that is, if you're passionate about and you think they can starting to make enough to support your family to spending, next, the risk is high, but also the potential is unlimited. If you can start pumping, some people make $1 million or $2 million, or can make $50 million. That's how the companies start. And also, that's the way to go to. And next, you can also invest private equity, like SpaceX, like other big private companies that are not public trade. But if your net worth more than $1 million or $2 million, you can go through some process in buy private equities before they go public, like SpaceX, like Elon SpaceX. If you invest SpaceX long time, like Google invest SpaceX for 7%, they make a lot of money already. So private equity is not everybody can access to have the private can do it, but if you in this step, that means you can do it. If that's the best way to do that too. Then you can also do next. The last one is you can probably invest more rental income. If you don't mind to deal with people, you can invest more real estate, rental, single family, townhouse, and duplex for rent. So that's another for diversity. You have in the stock market, and you also have private equity. You have your own business, and also you can buy real estate rentals. So that is the most investment strategy people use. Of course, there's more other things like you can collect antiques and gold and commodities and also digital products. There are some other ways too, but these, what I list is the common from least risk to risk, from low margin to high margin profit process. If you follow these steps, these strategies one by one slowly, and be careful, think like 3 times before you do action, I think you really can do really well. But also you got a passion about not just for the profit, but also you can enjoy the process. I hope this information helped. Let me know if you have any questions. Thank you.